Welcome back to this week's Bitcoin price action analysis. My name is Josep Capó and I am a trader and an alpha for the Brooks Trading Course website. This week we are going to analyze the weekly and daily charts of Bitcoin, plus I will give you a bonus on how I approach trading in lower time frames. Alright, so let's begin. The weekly chart of Bitcoin, the first aspect that a price action trader always starts with, it is to understand the context. The context of the chart, it is that we are likely more in a trading range environment rather than in a trending environment. This is important to note because there was a huge bear move here, a couple of legs down, a bear channel. But here, the price action started to go more sideways than following the momentum of the bears. And instead of continuing strongly down, the price action has been now going sideways from actually, we are at the same price or around same prices like we were in February, and the price hasn't moved much around there. I believe that we are in a trading range environment and that we are probably low within this trading range because on the higher time frame, in this case the monthly chart, a monthly chart that we have discussed a couple of weeks ago, we are coming from a long-term bull trend, and this is the first breakdown of this long-term bull trend. And normally after a strong bull trend, we transition into a trading range rather than in a bear trend. So now we are 60% sure, which is not much, that we are in a trading range and that it is more likely to find buyers below previous lows. In this case, for example, the February or January low, I think it's a February low here. So more buyers than sellers below. However, as you can spot here, there is a trend line, a wedge, a lower trend line of this channel. It's 1, 2, and here there might be another leg down testing this line for a third push down, testing the $50,000 level. The $50,000 level, it is a huge magnet. It is as important as the $100,000 level, which I think it remains the most critical big round number level of Bitcoin. Now, in a more granular price action, the price has been going sideways during the whole summer for now. So July and now in August, we are trading sideways in a tight range. This week's bar is currently an inside bar, so it's within the previous bar's range, and the previous week was already within the previous bar range. So this could be an inside pattern. So the price is contracting. What does this mean? Does that trigger any kind of signal? Because we know that normally when there is a climax, like for example here, that there was a bear climax, a bear breakout, a breakout and the climax are always the same thing. So we had after the climax a couple of inside bars. Here this triggers a setup, either a continuation setup, 50% chance that the price will deliver a 2-to-1 reward to risk ratio on the downside for continuation, and 50% chance that the price will give a reversal of the same 2-to-1 reward to risk ratio. So that's a setup. But when we have this kind of pattern within a tight trading range, it's meaningless. What we understand on this chart is that the price is going sideways. It's pretty balanced right now. Bears, they see this like a bear flag, like they believe that while this gap, micro gap between the low of this bar and the high of this bar or the high of the low one, bears believe that while this gap remains open, they are going to continue to discover on the downside. And actually, the market has been never flipped to always in long yet. So bears still dominate the short term. And it's possible that they continue down and even test in a climatic way this $50,000 level. Bulls were tried here to close this gap. They tried to test the low one top. They failed. Now they tried to do a high two, so a kind of higher low double bottom here, major higher low for looking for a reversal there, but they are still failing. So they need. Last week I told that as an inside bar it tends to fail. So bulls buying here, I think that they were doing they were not doing well, and normally bulls will wait at least until there is some kind of sort of momentum, and especially a bull breakout plus follow through. So this is not happening. Now, it is a good sell below this inside bar. I think that, well, whenever there is a bear body, and especially closing near the low, that is more favorable for the bears. But as we are saying, we are in a tight trading range, and it is the kind of environment where most traders should wait until there is a breakout and follow through and the move starts, right? I don't think, or I think it's challenging to sell as a bear here, because this is leg one, leg two, and now this is leg three. So we are late in the channel. The action is sideways here. The bulls closed gaps already, and I believe there will be, or I think that there will be more buyers than sellers below this low or this current low. So even if the price goes strongly down and tests the $50,000 on this time frame, it is challenging to sell momentum when you are in a late leg. And that's a thing that you have to know, because the risk of a reversal is high, and then managing the position becomes more challenging, and traders plan for their trade. I think that's critical. It means that the price is going to continue down? No. Sideways, there is no clear direction, and we must be patient. All right. Now we are going to move to the daily chart of Bitcoin. Here is the daily chart. As we have seen on the weekly chart, so the price is contracting. This is a bear leg of 3-1, pullback 2, pullback 3. Within this range, the price is currently contained within this range, so between this high and this low. So the price is compressing for now more than a month. It is summer. Maybe there is less activity on the desks, but from a price action perspective, price action discounts everything. So what we are seeing, it is a low activity and a compression in price. After compressions come expansion. So in a breakout mode, we expect a breakout to happen, but we wait until the breakout happens. Now, the most critical highs and lows for me are now, this is the high, critical high. I would like to see a bull breakout from here plus follow through to believe that there will be a strong trend on the upside. And on the downside, you have this low. Currently, this low, it is the one that we are looking for. Here we have the drawings on this chart, and we are going to discuss this most recent price action. The bulls wanted to break up this double top last week, but they did like one pullback, two pullback, three, and double top with this high. And bears reverses down, and now they have 1, 2, 3, 4, 5, like a sequence where you can see 5 bear bodies. You cannot see bull bodies here. So even if this is wedgie, like 1 pullback, 2 pullback, 3, and we expect sideways to up action like a 5 bar reversal, which is usually what happens after a wedge, in this case, maybe it's even more brief, but some sideways to up action. But yeah, bears are somehow strong. They have flipped this always in long movement. It looks like a trading range. So the most likely outcome, it is a reversal up here from this double bottom, but still what can happen and happens 25% of the time, and that's more than many people think, it is that there could be a breakdown. Now here on the orange lines I have drawn the possible measured move down based upon the height of this range, of this double top, or call it double bottom, or call it the bull leg. So I believe that if there is a bear breakout of this parabolic wedge down, the price will likely see some kind of either a fast momentum towards the testing the lows of the trading range, or it will have some kind of second leg down, trying to reach this measured move down. So that's something that traders look for. They look for another double bottom here and the bull reversal, or a bear breakout of this structure, which is currently low probability. But if this breakout is strong enough, and or if there is enough follow through bear, or traders will expect another leg down. So now this, I tried to be a bit more brief today with the weekly and daily charts analysis, but I wanted to share with you the approach, or how I approach the trading on lower time frames, like I will say 2 to 4 hour charts of in crypto. All right, so what you are seeing, it's my trading view setup for trading, in this case crypto. And what you are seeing is a normal price action candlestick, Japanese candlestick chart. In this case, it's 2 hour charts, is to trade swing trade. And then on the right, you see a table, which is my indicator, the indicator I use, and the indicator that it shows me the outside bars, these red circles, these circles, or the triangles that are inside bars. Moreover, it shows me the exponential moving average of 20 periods, classic Al Brooks. And the table, what it tells, it is different things. So in this case, AWR tells me the average weekly range. Why is that important? The average weekly range, it is the range of the bars of the past 20 weeks, right? It tells me on average how the size of the moves between or during the last 20 weeks, right? When we are trading intraday, we pay a lot of attention of how far the move has been done in relation to the previous days, right? If, for example, today we expect 100 points move, and the price has already moved 80 points, that means that we are close to what normally the price action delivers for that day. So the moves is probably getting exhausted, or right? But if the price has only moved like a small fraction of what typically moves on the day, then we expect the price to expand. So we expect a swing to happen, right? So we know that there will likely be a move that will extend the current price action, and long moves bring us opportunities. So that's why it is a good reference to have this kind of information. Now, when we swing trade, or when we go to higher time frames than intraday, like for example 2 or 4 hour charts, we are not trading intraday, and that's in crypto normally a must to do, because the price is expensive. So the costs of trading crypto are high on lower time frames, right? You have the fees and commissions, or the slippage that is big, and therefore it costs you a lot to trade lower time frame, and that erodes your trading edge. And that's something that traders, professional traders, we look for. We look like for cost-effective trading. We look for something cheap and reliable to trade. So when you have an asset that is reliable, like a high capitalization crypto asset, then you can trade it. But currently, the best way it is going, for example, to a 2 or 4 hour chart that's strong, that's high enough to make these costs from crypto more irrelevant, and you can have proper or more advantage to, or you have a better edge in the market, right? Now, I treat like these higher time frames like if I were starting a new trading day. That's a personal thing. But this is the same that Al Brooks explains in the Brooks trading course, especially the Forex trading course, which is always continuously trading, that gaps between days are not something common because the price trades all day with a huge volume, right? So we treat these charts like trading, the continuous trading. But it is true that I normally like to separate, even if I go to higher time frames like the 2 hour chart, I like to frame it between weeks. Like, for example, I would like to see that, I don't know if you see this vertical line separates last week from this week. So what I do, it is I look for the last week's price action when I approach the new week, and I have my painted drawing my price action. So I start the week, for example, here. So we have a double top there. And now I want to see what Monday brings, and we start with a triangle here. I treat it like an opening day, like this is a breakout pattern, and now there is a bear breakout, right? So I expect from this pattern that has been completed, 1 pullback, 2 pullback, 3 double top. Now there is a possible major trend reversal setup. So I do all the price action stuff like I will do on any chart. But I like to understand that this is a new week, because now when, for example, I am within that week and I am on Tuesday and I'm seeing this second leg down, and I watch for, all right, so now how much of the move has happened? 2000, all right, so the price moves on average 5,300 during every for a week. So and there is a possibility that this price action can extend. However, I know that if we are approaching this, in this case, $5,300 that is moving every week on average, then I should expect more trading range price action. All right. So whenever, that's something that you can discover throughout the trading course or in the trading room, that depending on the size of how the price has moved during the day, then we expect more trending behavior, or we expect more trading range behavior. So this is the only thing that I change. It is that I want to know these values here, because that helps me to understand the possibility of or how should I approach trading. So these are quantitative references that I look, and I approach like a new week is different from the last week. So I want to know if the price action structure from the last week will continue, or if there is a new change in perception. So I separate weeks in this case, but I also separate it if I want to go on a higher time frame. Let's say, I don't know, the 8-hour chart. I can move to a monthly framework, right? So I will do the same on an 8-hour chart, but now I'm looking for trading the past month in relation to this new month, right? And that helps me like settle a framework. Okay, and this indicator that I put available for free on my website, josecapo.com, you can select whether you want, for example, in inputs, if you want to trade the weekly time frame, the daily time frame, if you are a day trader, but I don't recommend that for crypto traders. But you can select which kind of range you want to know in order to understand whether you are early or you are late in a move, right? So if, for example, we here switch to monthly, we are going to treat like monthly frameworks here. If you are managing several assets, I mean, there are a lot of like hundreds of crypto assets that have a strong and a lot of volume enough to be reliable on this higher time frame, the price action being reliable. So that's useful if you trade a big sort of assets. Now, I'm used to trade, for example, stocks, and in the stocks or trading of stocks, I normally don't separate between month, but between earnings reports that they happen every quarter. So you can put your imagination, but what we do here, why we separate the frameworks, is just to know how the price action is in relation of a previous relevant period. In this case, I can suggest you to try for example, a 2-hour chart where there are about the same bars on 1 week, like, for example, when we trade the 5-minute chart of the mini S&P 500, that there are like 81 bars during the regular trading hours. So this will be a very similar approach. So now you can go and find this trading indicator for free on this website. And I hope that this kind of approach helps you trade better and frame your trading routine in a better way. And that's all I've got for you today. I hope you enjoyed this video. Please, any suggestion or any comment is appreciated in the comment section. Do not forget to visit the Brooks Trading course. You have the link in the description of the video. See you next week. Thank you.